MJ, should I start up with the poll so that we can get things rolling?
Yeah, sure.
Right. Good afternoon, ladies and gentlemen. Thank you to those who come on time, the early birds. Really appreciate you guys for taking time to join us today. Right. So without further ado, I'd like to just start off today. Before I hand over the show to all my superstars here today, what I'd like to do is perhaps to conduct a very quick poll so that we can get some feedback from everyone here as well. Okay, ladies and gentlemen. So what we'll do now is we'll pull up two polls, two questions here. And let me just relaunch poll. Right. So I have, if you can see right now on your screen, I put up two polls here. Basically, just want to find out where exactly are you putting your money now, and are you exactly happy with the portfolio that you have? Okay, so I seek your help, just to chime in, give us some of your thoughts, so that we can at least have a very quick overview of the kind of the audience understanding of all the investment options that's available right now as well. Thank you, everyone. And great, the results are coming fast and furious. Really appreciate it. Keep it coming. You may not see the movement right now, but I have to confess that I am very surprised to see that CPF is actually very, very low. Almost no people, almost not many invest in CPF. Okay, do not let our government hear that. Right, so I'll leave the poll on for the next perhaps just 1 minute, so that as more attendees come in, they can also take part in this quick poll as well. And for all my attendees, once again, thank you for taking time to join us for today. I'll just really quickly walk you through the agenda and how we plan to do this right now. So first and foremost, what we'll do is after the poll, I will quickly just maybe spend the next 1 minute to share with you exactly why are we doing a session like that. And then after that, I will also then hand it over. I'll just maybe invite our three very esteemed speakers to introduce themselves very quickly. And after that, we will split our session into two parts. The very first one is where I'll invite speakers to address some of the pertinent problems and questions that all of you have raised, as well as things that we'll be hearing on the ground as well. That kind of describes or kind of explain what digital wealth management platform is all about. And then after that, we will give every speaker some time to share about their product offering and how is it unique and how can their product, service, and offering support your investment portfolio. Okay, maybe the next 30 more seconds. All right, we have a tight agenda today, so without further ado, let me just end the poll now. And share results. Drum rolls, guys. As you can see, property investment, very low. CPF, very low. A lot of others, robo-advisors is good, pretty decent number. Personal trading and savings. Savings, all right. So this is to all my speakers there today. Savings is actually one of the big component there, So you guys know what you have to do then. Right. So let us begin today's session. My name is Ruben. I'm the Chief Operating Officer for Singapore FinTech Association. I'm actually joined today by three esteemed speakers, Michele from StashAway, Drew from SEIF, and Samuel from Endowers. I will leave it to them to share more about themselves because it's good to hear from the horse's mouth directly as well. But I just want to share with you quickly, why are we doing this today? Digital wealth management, or to some or to most people, they are known as robo-advisors. They are not new. They've been around for some time, a good easily 5-6 years already. But why is it that we are doing this today? Is because we do realize that more and more people need to hear of this and have a better understanding of exactly what digital wealth management is all about. And at the same time, there's been a lot of new trends that's coming up that is actually influencing this new options in investing. So first and foremost, one of the things potentially we all heard of this before, FIRE, FIRE, financial independence and retire early. So this is really a real movement that's coming up very quickly. But how do I actually attain that possibility? So of course, one thing is about adjusting your lifestyle, but on the other hand, it's about having more good, sound, very solid investment options that you can have. And digital wealth management is definitely one of them. And at the same time, to many retail investors out there, probably the options that is really before you may not be plenty as compared to accredited investors or as compared to institutional investors. So, and plus inflation right now is the real topic. Inflation is on the rise. My kopi kosong has been increasing like crazy. So I do think that our wages can only increase at a certain speed. So therefore, we do need more possible very good options here. And that's the reason why we are having a session like that. Okay. Now, right now, what I'll do next is I'll just invite my three speakers to just quickly share, introduce themselves to you, and let me do it in alphabetical order. All right. So right from the start, can I have Samuel, please, from endowers?
Great. Thank you, Ruben, for inviting me and endowers here. It's great to be here with two great friends and partners, Michele and Dhruv. It's been a while since we've shared the stage together, but great to be here together again. I'm co-founder and chief investment officer at endowers. I was previously the CEO and CIO at Morgan Stanley Investment Management in Asia. Endowers is a leading digital wealth platform here in Singapore that builds holistic and institutional quality advice and solutions for all Singapore-based investors and localizing for our needs here. We're the first and only wealth app where you can manage all of your investment in both private wealth and public pension in a seamless and holistic experience. This is possible because endowers is the first and only digital advisor approved by the Singapore government to provide online CPF investing. Therefore, we're the only wealth service where you can invest all of your savings, whether it's cash or CPF or SRS, across a broad suite of best-in-class investment solutions. So think of us as a digital version of a UBS or Morgan Stanley, a digital private bank, but democratizing access to the masses. And instead of having to wait till you have tens of millions to go to a private bank, you can get started early at endowers with just $1,000, getting similar, sometimes better access to solutions and services you would expect at a private bank. I look forward to sharing more about the exciting progress endowers has made and the digital wealth industry and the key trends. So thank you for having me here.
Thank you, Sam. I felt rich already hearing that I can be on par with UBS in my investment. Now, next up, can I have Michele from StashAway, please?
Sure. So first of all, Ruben, thank you so much for having me as well, and super happy to be again in the panel with Sam and Dhruv. Actually looking forward to do this in person. I remember in the early days, this used to happen side by side rather than via screen. I'm kind of looking forward to that as well. My name is Michele Ferrario. I'm one of the three co-founders of StashAway. I'm the CEO. My two co-founders, one is in charge of technologies, the CTO. The other one is in charge of investment, is the chief investment officer. StashAway is a digital wealth management platform. We help hundreds of thousands of people like you manage their wealth. And the way we think about it internally, we want to empower people to build their wealth in the long term. We have built a set of solutions that enables you to do that. And we provide those solutions across 5 markets. We are in Singapore, Malaysia, Thailand, Hong Kong, and the UAE. We have been around, I guess, the longest. We launched in Singapore 4.5 years ago. And therefore, we have a fairly long track record where we showed how we can help people over time build their wealth through the ups and downs of the markets, through the corrections that there was in late 2018, through the market crash of COVID 2020, to the underperformance of China tech in 2021, and through the ups and downs, we encourage and we enable people to do the right thing so that over time they can build the retirement plans that they want, or the kids' university fund, and more broadly just build wealth, giving easy access to intelligent investing. This has been the key to everything we've done since the very beginning. I lead a team of more than 200 people across 5 countries, and so it's just the beginning. I'm sure there is many clients of ours in the room. You'll see many more continuous improvements and additions to our offering in the next few years. Anyway, I'll keep it short because I know we have time to speak a bit more in details about our offering later, and I guess I'll hand over to Dhruv. Thanks,
Michele. You got me at retire early and build wealth. Now, last but not least, our dear friend Dhruv has been very kind gentleman too. And now, Dhruv, can I hand it over to you, please?
Thanks, Ruben, and thanks again for having myself and SEIF at this panel. Again, great to be with Samuel and Michele and talk about the broader awareness of how digital wealth management is changing the industry. So my name is Dhruv Arora. I'm the founder and CEO of SEIF. Prior to SEIF, I was a director at UBS, looking actually and starting the ETF distribution desk. This is, I'm talking about 8-9 years ago, where ETFs were still very, very new. And now I think majority of people consider them as a part of their daily, investment habits, so as to speak. We are a Singapore headquartered and an MAS licensed digital investment platform. Our premise always was that we wanted to give the same high quality solutions, the same high quality institutional level of service that I have myself given to institutional clients, and make it more accessible and more affordable for everyday customers. So we offer them through what I would call as smart, affordable, and intuitive financial solutions. We are actually a holistic platform. What I mean to say by that is we not only have a managed wealth platform, what we call as SEIF Wealth, which offers fully managed, curated, and customized portfolios. This is built in partnership with the world's leading financial institutions. The ETFs we use are by the world's biggest funds, whether it's the BlackRock, whether it's the State Streets of the world. So all the very best, which we curate and selected for our users. And alongside with that, I'm very excited that I think for the first time in almost 2 decades as a Singaporean company, we've got the MAS license recently to launch our own brokerage. So we launched actually SEIF Trade just last month, which is Singapore's first neo broker offering free trades, auto FX, and much, much more. So we'll cover some more about it as we get along on the presentation side of things. But again, very excited to be here and very excited to share about what we are building at SEIF.
Thanks, Dhruv. You got me a free trade. All things free sounds fantastic to us. Right. Thank you to all my 3 very esteemed speakers. Ladies and gentlemen, you have heard from the 3 of them. You have recognized by now how strong today's panelists are. So do sit tight and sit through all the way to the end with us. Right. So as promised earlier, what we'll do right now is that let's answer some of the key questions that people have been asking about the solution in general, digital wealth management / or robo-advisor. Now, let me just put up a few questions to all my esteemed speakers to maybe take them, tackle them, address them, and so that this would kind of quell all those questions once and for all. To Michele, first question to you. What trends do you see that's really pushing digital wealth management as a very important option in everyone's portfolio and investment portfolio for that matter?
So thank you for the question. To be honest, I want to slightly edit the question, meaning that I don't think about it that way. And I don't think anybody should think about it that way. And I actually don't think people think about digital wealth and non-digital wealth. I think when you think about a portfolio, you need to think about equities, bonds, real estate, cash, etc., crypto, whatever you want to add to the list, but not digital, non-digital. Each of us as individuals that are trying to manage our savings and build wealth over time need to think, we don't care whether you have invested through a digital mean or you signed some pieces of paper offline. That doesn't matter. What matters is where is your money and how does that work for you over time. So to me, digital wealth is simply a path toward making it simpler or even possible to access a certain type of wealth management services, which were not accessible before we launched 5 years ago in Singapore. I mean, both Sam and Dhruv talked about how I guess our collective effort is to bring access to products that were once only available and solutions were once only available to institutions or to ultra net worth individuals, how we actually make that available to everyone. And that's possible because of digital technology. So what are the components of that are, I think, that all of us, and I'm trying to speak on behalf of kind of the industry more than the company, that all of us have been working on and trying to help our client is first of all, making it very easy to diversify your exposure. So making it easy to actually have a diversified portfolio. So you're not investing in 3 stocks. Maybe, and I know a lot of Singaporeans that have, DBS, UOB, and OCBC as your portfolio. That's not a portfolio. It's incredibly concentrated, right? And, maybe they're going to do amazingly. I'm not saying that's not going to happen, but it's a very, very concentrated risk for whoever does that. So again, the digital wealth manager have been trying to make it very easy to build diversified portfolios to have a risk-first approach to your managing your money. How you actually put risk at the front and center of your decision making, to be in control. So the fact that you have 24/7 access through your app to where is your money, how is it doing, do you want to invest more, withdraw, close the account, change risk level, etc. Those are all things that 5 years ago were absolutely not possible in Singapore. And those are all things that we brought to the table when we launched, and now obviously there is multiple players offering slightly different services in the same direction. And then lastly, but obviously not leastly, keeping costs low. So that's the other angle that I think all of us have contributed the industry to go toward. Investing with our platforms decreases cost of investing very significantly, and that when you cut 1.5, 2 points per annum from the traditional way of investing, a lot of people used to, or still actually buys unit trust with entry fees and maybe 1.8, 1.9% management fees from the either the independent financial advisors or the banks. There is a lot of money just going out in fees that doesn't work for you. So the ability to actually reduce those fees and making it much more transparent actually is, I think, a core feature. So summarizing and making a step back, I don't think you can, when you think about a portfolio, you shouldn't think about digital and non-digital. You should think about asset classes, equities, bonds, real estate, etc. That's a portfolio. Now, whether you access those asset classes by signing a piece of paper or logging in online, it doesn't matter. What matters is where does your money go and how does it work for you. Why I think us as digital players have improved significantly the quality of service that each Singaporean can get access to, as I mentioned, is a factor of making it easy to access investment, to diversify, to have a risk-first approach, to be in control of your money all the time, and to lower cost. Now, let me conclude quickly with another point. You mentioned earlier, the inflationary environment where we are. And when I started StashAway 5 years ago, one of the triggers, so the main trigger was that I was very unhappy with the way the banks were serving me. But one of the triggers that made me think, oh, actually, this is not just my problem, it's a broader problem, was that I look at data and realize that in Singapore, and this is actually true across Southeast Asia, a gigantic proportion of money sits in bank account doing nothing. In Singapore specifically, 37% of financial wealth sits in bank accounts with very, very low yields. Just to give you a sense, that number is 14%, 1.4 in the US. So in Singapore, there is 3 times as much cash than there is in the US, for instance, and double Australia, just to give you another frame of reference, more or less. Now, this is a problem because that money is not working for anyone. It's not helping you build your retirement plan or building your university funds for your kids or whatever, whatever dream you might have that requires some financing. That money should be put at work. And that's, to me, it's a very important task that all of us collectively, I guess, we're trying to help people do. This is becoming even more important now with a high inflation, because obviously cash in the bank not only is not giving any interest, but it's also losing real value because of inflation. That's why I was tying it to what you mentioned earlier. And I was not surprised to see that the first, when you did the poll at the beginning, the first result, if I remember correctly, was actually 30% of people said, saving accounts or cash accounts. And I think, maybe I'll leave with this. I think I encourage everyone to look at your portfolio, think about your asset allocation, and asset allocation includes cash allocation, and think proactively about what is the right level of diversification you want in your portfolio and how you can actually build money over time. And I think our platforms are designed to help you do that in a simple way, getting all the access you want and at a fraction of the cost you would do through traditional channels. I'll stop here.
Thank you, Michele. I couldn't have summarized it better than you. No way. You have said it. Thanks for rephrasing the question. Digital wealth management is the source of diversification. If you want to diversify, this is the platform to help you diversify. Now, thanks for that. Let me then put it to Samuel then. Sam, is investing, this is a very heavy question, unfortunately, so I have to depend on you for this. Help me out here, my friend. Is investing in digital wealth management platform safe? I'm sure everyone will be asking that a lot of time. And what are some of the risks, that one should take note of?
Okay, the 3 of us are safe. let's start with that. I think first of all, we need to define what wealth services we're talking about, because wealth is, I mean, finance is a really broad subject, but wealth is also very broad, because some service providers are, providing brokerage services for trading, single stocks, or it could be a robo-advisory service, or it could be a wealth platform, it could be a fund manager, that has discretionary fund management, or it could be a fund platform that distributes funds. And there could be, in terms of products, cash deposits, public markets, private markets, crypto, even different asset classes, equities, fixed income, commodities, etc. So it's a broad swathe of solutions and services that are being provided by the industry. I think there's been tremendous progress made across various digital solutions and apps that serve different needs, different segments of the market for different products and different asset classes. When we talk about digital wealth management platforms specifically, which is your question, I think we are talking about the more long-term holistic ones, that maybe not so much focused on trading and focusing on building wealth over the long term, right? And when we're talking about these wealth service providers, I think the first and foremost thing to remember is that we are a financial service company, that this is an industry that is a professional service that's regulated and licensed. And in Singapore, the Monetary Authority of Singapore licenses and regulates all of our 3 companies and all the other wealth players as well. Not all of them are licensed, right? Because I'm starting to see like new solutions or services or education programs which are not regulated by MAS. So I think caveat emptor, the consumer needs to be aware of the fact that financial services is a regulated industry. You need to check whether the financial institution is actually regulated by MAS and licensed by them. But when we talk about risk, I think there's 3 things that people really hone in on. One is my money safe? So the way we custodize the assets, execute trades, all of this, and all 3 companies I think are very similar in the way we connect with established incumbent financial institutions, whether they're banks that manage our deposits, brokers that execute our trades, custodians that custodize our assets and money, or fund managers that invest into the financial markets. All of these are very established, high quality, leading companies. So the money that is transferred between these entities is very safe, whichever platform you use. I think endowers uses a unique traditional kind of IFA model. So we open up a separate trust brokerage account in the client's own name at Singapore's largest broker, UOB Kay Hian. You can, all of us, I think you can only send and receive money into accounts that are in your own name as well, which is really safe. So I think in general, the money transfer and the assets are very safe as well. Now, as a digital first solution, and especially because we've seen so many digital accidents or IT risk being highlighted and scams happening in the industry, the third point I would make is that digital first solutions, obviously there is a technology risk. And it's up to us as a licensed and regulated entities to make sure that the information of our customers, the tech security is up to scratch, basically. And this is an area that is, again, regulated by the MAS. Regulators, IT audits happen. There's tremendous progress in technology in this space as well. So we're advancing in terms of in-house solutions and technology, but also there's best-in-class technology vendors that we can use to make sure that our clients' money and their information is very secure and safe. Endowers does not self-custodize, so we never touch clients' money. So it's even doubly safer because we intentionally designed it that way. And finally, I would say that the other risk that everybody would be asking is about investment risk. And that's something that is beyond the norm of, whether it's risky for a platform or not, because whether you invest through us or any other digital platform, or whether you invest through DBS or UBS or a broker, it doesn't matter, because I think financial risk and investment risk is something that's related to market. We all know that risk and returns are correlated and something that has to be suitable as an individual, and you need to invest with your eyes open in financial markets. So I'll just stop there and pass back to you, Ruben.
Right. Thank you, Sam. Thanks for the very comprehensive answer, because I think, ladies and gentlemen, after hearing from Sam, it will give you a lot of assurance to know that what are you waiting for? This is definitely, if your concern is really whether it is a safe platform, I think SEIF has given you a very, very comprehensive answer, both from the platform perspective, technology perspective, as well as investment perspective. Now, I have a very interesting questions to Dhruv. Dhruv, just now when we do the poll earlier, apparently one of the top one, in fact, I think the highest one that came up was actually people who trade on their own, so over-the-counter trading. Let me ask this let me pose this question to you then. How is robo or digital digital wealth management different from this what we call DIY investing or trading?
Yeah, I mean, I think it's great actually that you've asked me this question, because I think we are the only one now which has, as I mentioned, a brokerage license, and we have a completely segregated trading arm, very different to our wealth arm. So I think the way how we've always thought about it is that every customer is unique. There are certain customers, let's say, who've had experience in the financial industry or have spent excessive time in the markets, where they have the comfort, they have the expertise, they have the time to actually go and trade themselves. Now, there is another breed which we still think is a very large segment, which actually either doesn't have the expertise or the time, or wants to put their effort elsewhere. So the way how we think of it is, I think at the premise of it is that if you're confident about what you're doing, if you know what you're doing, and you've something that you're comfortable with, then you go down the DIY route, right? But maybe I'll just park that for a second and talk about with the assumption that many of people are not at that stage. And that is where, digital managed kind of solutions come into place. So when I look at it that way, right, I think the advantage of a digital, managed wealth management platform like us is that it allows people to overcome the barriers of understanding, how do I invest? What do I invest? Will it be cheap? And so on and so forth, right? So let me give an example, right? So from an angle of ease, the effort and time it takes is negligible. Once you've set up, a majority of users, they literally have this auto top up. I'm sure this is the case also with my, with my friends at StashAway and endowers, that essentially they set a portfolio and they forget it. And then, every month, 2 days after their salary comes, a part of it goes in a portfolio and they know it's getting taken care of, right? So this really popular term of dollar cost averaging is somewhere happening by these portfolios, right? The other thing, of course, is that the fees, because of the fact that this is happening at such a big scale, is way more affordable. So especially for users who are maybe putting a few $1,000s aside a month, if they were going to go down the route of DIY and then build, I think Michele referred to this point of diversification, which I think all of us adhere to, the cost of that diversification will be phenomenal. So if you went through a conventional bank, or it's just going to be really, really expensive. But for platforms like us, right? I mean, our highest tier, the cost basically starts at 0.35%. So that real low cost. Then when you add the fact that we can auto reinvest your dividends, the rebalance is taken care of, there is no hidden fees, and there are no lockups, right? I mean, this whole point of, there's an entry fee, there's an exit fee. So all those things actually somewhere feed into your cost. So that affordability, what these solutions offer, is also phenomenal, right? The next point I would say is the quality and expertise. I mean, if you look at the team pedigree across the board, right, we all come from big financial institutions. We've all managed multiple $1 billion. I've traded like multiple $1 billion on a day, for example. So that expertise is now given to the masses, right? And again, as I mentioned, if you have the expertise yourself, you're comfortable, you go down that path. Otherwise, you come to solutions like us. Now, on our side, we also have the licensed wealth experts who have formerly worked at big banks, whether it's Goldman Sachs, UBS, etc. And they're also someone that you can reach out to and understand, how our portfolios, fit in. Now, that is not something you can't really call, your neighborhood broker and ask him about it. I mean, you probably can, but, their interests are probably not aligned the same way, right? So I think at the end of the day, when I look at what the solution that we are providing, right, and what essentially we're trying to build out at SEIF, we are trying to, at the end of the day, provide that institutional level of service, and in many ways become that, your digital advisor at scale, and giving you that same service, what probably you need hundreds of millions of dollars to have at a fraction, right? And at a much lower cost and completely transparent. So keeping all of them aligned, in summary, I would say is, if you know what you're doing and if you're comfortable with it, DIY is right for you. If you either don't have the time, you don't have the expertise, or you're just not, it's just not it for you, and you want to use it somewhere else, your efforts, that is when you would look for a digital managed solution like SEIF.
Thank you, Dhruv. You have exactly highlighted me, because I don't know anything about all this kind of stuff and I don't have time. So thanks for highlighting that and really appreciate it. So at least I know that this is possibly a solution for people like myself, and to the audience out there who, to Dhruv's point, who are not experienced, or probably you don't have much time. And if you want convenience, it's really convenient because you can just take part of your salary every month. So it's auto investing in that context. Now, to my three panelists, I'm mindful of time, so maybe I'll just invite you to quickly expedite your answer for the next few questions. Back to Michele. Riding along with the same questions that we talked about earlier, whether is it DIY or whether is it whether you do it yourself or do I do it through the wealth experts in-house? Then to that point, when it comes to target audience, who is suitable and who isn't suitable for a platform like that on digital wealth management? And more importantly, do I need a lot of money to start investing? Because I don't think I'm loaded.
Yeah, so I'll be quick. I think it's suitable for anybody that prefers to deal with things, to have things in control directly and deal with things directly, rather than meeting in person a relationship manager or a private banker, having a free cup of coffee in a nice office overlooking the bay. So if you prefer that second option, probably you'd rather go to the traditional route. Otherwise, the digital offering that platforms like Stashaway offer, I think it's suitable for everyone. That means that, to your second question, you do not need you don't need to be wealthy to do that. In fact, in Stashaway, we have a $0 minimum balance, so you can literally invest $10 and have a diversified portfolios across 10 asset classes. Now, I'm not going to tell you can retire with $10 over time, but it is a way to start, and it's a way to dollar cost average, and time works in your favor. So if you are 23, 24 in your first job and you can only spare $50 a month, look, $50 is more than zero, and when you compound it for 40 years, it may actually become significant. So no minimum, but also no maximum. We have a lot of very high net worth clients that actually have portfolios with us because they appreciate the sophistication of the asset allocation framework. They appreciate the fact that we cut down fees tremendously. They appreciate the fact that they have access to a wealth advisor they can call. This is only for accredited investors for regulatory reasons. And they appreciate the fact that they are in control. They can see things all around. So long story short, I think it's for everyone that prefers to have a more directly controlled access to their wealth through a platform that they can see, rather than going through an individual, an advisor, a relationship manager, or a banker in person having a cup of tea or coffee.
Thanks, Michele. Take me back to my 20s, please. I wish that solution was available when I was in my 20s. Now, just now I gave a very heavy question to Sam about risk. Now, Sam, let's come to the exciting one. What are the upside or expected returns I can have if I use the expertise of all the experts on this digital wealth management platform?
First of all, I want to say, Ruben, it's never too late. So even though you're not in your 20s and you look young enough, so never too late. Returns is a tough question. You're giving me two tough questions, Ruben. But of course, as a wealth service, and when you're building an investing app, clients come to us. Of course, performance does matter, and that's something that everybody asks. What are the expected returns? What's the upside we can expect? And we're expected to have services that lead to good outcomes. So we're all trying to build solutions that will hopefully reach good outcomes for our investors. In endowers specifically, we espouse a passive and strategic asset allocation. Science over art. So we're very systematic in the way we build portfolios, in the way we screen for the best-in-class products, and finding solutions that may not be available even here in Singapore, but making it exclusively available on the endowers platform. And we work with 50 of the largest global fund managers who manufacture great products for us. So we do that in partnership. We know the financial theory on returns, right? Expected returns. Returns are correlated to risk. So theoretically, you cannot get higher returns without taking a commensurate increase in risk to achieve that return. And conversely, if you're taking more risk and investing in more volatile investments, then you should be expecting or asking for a higher return. The spectrum of investing is very broad, as mentioned before, like across different asset classes, investment opportunities, public-private markets, alternatives, crypto even. And so there are other risks in investing other than the investment risk and the market risk that you're taking, such as liquidity risk in the case of private markets. You're taking currency risk if you're investing overseas. You have tax risk as well, et cetera, et cetera. So there's various risks. And so I think it's important for everybody to really be aware of the risks that you're taking, not just market risk and investment risk. Obviously, as I said, different asset classes also have different risks, but the one that I would highlight, and Michele alluded to this earlier, is cash, right? That there's massive risk to holding cash. Cash is trash, especially when inflation is high. That is a huge risk you're taking because it's in real terms is negative returns that you're holding on to. And the thing about risk and returns, I think, is a very subjective thing. When we meet clients, some people say, you know what, I want a steady, low volatility, 4 or 5% return. I'm happy with that. Some people come back with a ludicrous number, 15, 20% every year. And I'm like, okay, what kind of level of risk are you willing to take? And they say, okay, I want max drawdown of 15%. And I can tell you right now, that's not possible. So I think it's a very subjective and personal thing. Some people are more or less risk averse. So it's important for you to know yourself, to assess your own risk, what you're comfortable with in terms of how much risk you're willing to take, what are the, as a result, investment services that you're willing to invest in, and what are the expected returns and the outcomes that you expect from that. But I think as service providers, all of us, I think it's really important for us to be transparent. So transparency is something that is really, really important for all of us in the financial service industry to really improve. And transparency about returns, try to provide as much transparency as possible in terms of the investment philosophy, the process, and all these things I think will be very important. It's also important to be transparent about the risks that exist in investing in some of the products that we distribute or sell or build. That transparency is what allows clients and investors to make better informed decisions on what to invest and what the expected return could be. And so most importantly, to see whether it is actually suitable for them. So digital platforms like endowers and my esteemed colleagues here, we have an edge because we have a captive audience in our app. We can provide much more information and transparency than the normal incumbent bank and financial institutions because you have to go to a bank branch to meet the teller to be informed about a fund. And obviously the teller is not going to be as well informed, will not have the wherewithal to provide you with all the information. And there's often mis-selling of products that's happening because they're not transparent or they're not providing enough information and clients are not going in with their eyes wide open. One key segment of the market that is very guilty of this is insurance companies with their insurance linked products and stuff where even fees are very hidden, cost is really high and they don't really give you fully transparent details about what the returns you should expect from that net of fees. So I think that all of us in the digital space is improving, transparency, and the efforts I think will definitely help consumers and investors.
Thanks, Sam. If I were to rephrase what you just shared earlier, in essence, there is something for every risk appetite in platforms like all of yours. So if you want higher returns, there'll be higher risk. If you want lower returns, there'll be lower risk. But more importantly, cash is trash. So put your money somewhere and don't just keep it in the bank on that note. Now, one last question before we go back. We return the time to all my three esteemed speakers. To Dhruv, this is one of the more pertinent questions because we get these questions quite a lot, and especially through the survey that we conducted at the point of registration as well. Is investing on a platform like all of yours liquid, and is there a lock-in period? And more importantly, what is like a suitable time horizon for an investment platform like all yours?
Sure. So our portfolios have no lock-ins, and customers are free to withdraw their money, transfer between portfolios, do anything as many times as they like, right? And I think similar to what some of my panelists mentioned earlier, this is a big edge over some of the conventional banks where they charge you, 2% for early break fee or exit fee and God knows set off fee. So there is no like entry, there's no exit fees. So absolutely no lockups, right? And I think that is really powerful because as a user, you don't really need to, be concerned that, oh, if I withdraw my money today, will I end up losing more or will there be some fees and so on and so forth. Which actually feeds in very well to your second question, right? Like, is there a suitable time horizon for platforms like us? Now, I think on our side, while we've built the portfolio with an understanding that life happens, people might need the money much earlier than what they expect. They might have different priorities. You might have a kid, etc. We still recommend users to stay invested for as long as they can. And this is purely and purely backed by science. I mean, if you look at data, historical data, it's a well-known fact that it's not about timing the market, it's the time you spend in the market, right? So ideally, you should keep it, as long as you need it, unless you have a better use of it. And as we all have been saying, that better use can't be lying as cash, right? I mean, that absolutely is something which we can't do. So it's quite interesting because some people sometimes have significant amount of money and they're not willing to deploy because they're like, oh, what if I need the money? But with platforms like us, now for us, for example, on our cash management solution, if you withdraw before 11 a.m., it'll come back to you by 7 p.m. So with such a low gap, that's coming in, people, of course, have that temptation to actually act more and withdraw. But if I look at data, even our customer data, those who have stayed invested, whether was it the wave in 2020, COVID, or the recent cycles, they've actually ended up benefiting. So stay invested for as long as you can. Of course, if you have a better need or you are sure of a better way for in which you can manage your money, go ahead. But again, it's the time you spend in the market and not timing the market.
Thank you, Dhruv. You guys left me with very, very good quotes today. I can go back and impress everybody with all the quotes. It's not how long you spend, it's not about timing the market, but it's how long you spend the market. But yet, all that said, you can actually withdraw at any point of time. So ladies and gentlemen, I think that's a very key point to take away with. Now, let's go into our second segment or the final segment before we go into a Q&A. Gentlemen, in view of time, I would like to give everyone 7 minutes, approximately 7 minutes, to really quickly share about your unique offering and what is it that you would like the audience to know about your product. Now, again, let's go in alphabetical order. Can I have Michaela to share with us this? Oh, sorry, my apologies. Let me take it back. I should be going to endowers, but sorry, I realized even I got my alphabet all mixed up. My apologies.
You got me confused there for a second, Ruben.
Yeah, I was like, maybe
S before E. No. I have to return to my primary school, my elementary school. Sorry about that. Sam, please.
Okay, wonderful. So let me just quickly share the slide here so that we can all see it. Sorry.
Yeah, we can see it. You can see it.
Yeah, okay. All right. So endowers, we have a mission to help everyone invest better so they can live easier today and live better tomorrow. This is an SFA event. So on the either side of the spectrum, you might have some people that you recognize here, ex-SFA or present SFA members. These are our clients, our advocates in our advocacy campaign last year, but it's normal people. It's for all of us. We started the company because Greg, my co-founder, and myself had a major pain points trying to manage and invest our own money. So we want to make it easier today, but more importantly, achieve good outcomes to live better tomorrow. endowers, I would highlight 3 words here: is a fee-only wealth platform. First, digital advisor for all your money. Cash, CPF, and SRS. So the first one is fee only. We want to move ahead of regulatory changes. A lot of the incumbent banks and even private banks and fund distributors have very high loaded fees, which are not transparent. It's misaligned to the best interests of our clients. And so the developed markets have been banning commissions for distribution of financial products. And so it's important to be aligned to the client and be fee only. It's something that's not been instituted here, but we are leading the charge in being a fee-only advisor and a fee-only wealth platform. The second thing, obviously, is digital. We want to be a leader in the digital space. And the final thing is advice. I think that the future of wealth is about advice. How do we build advice seamlessly into a digital app so that we can provide better advice, improve financial literacy? And that's why endowers is not just a financial service company, but we're a content company. We want to improve financial literacy. We've done a lot of work with the industry, with the community to improve that. We're backed by global and strategic venture shareholders that you can list there. Of them, obviously, we can highlight UBS, which is the largest private bank in the world. Their first fintech investment in Asia Pacific is into endowers. And obviously EDBI, the first government entity to invest into a wealth tech company in Singapore as well. So those, I think, recognition of the progress that endowers has made. And so that's a nutshell of what endowers is. But what really endowers is about is the people behind it. So I think that financial service, more than any other industry, is all about the people. And financial services, as we know, as I said, is a professional service that's regulated and licensed. So the wealth of experience that exists across the board, from leading financial institutions, across investment in technology and product, and risk and compliance, where we've been very high quality hires that have improved us tremendously. So you can rest assured that endowers is being built by financial and technology leaders from across Asia. And I mentioned that we are backed by leading investors, but the company was bootstrapped for many, many years, for 4 years, before we finally got some external investors last year. So it's not just owned by the co-founders. It's a very broad ownership of employees having deep ownership across the board. And so that, I think, has allowed us to be very different in the way we've approached and built the company as well. Why our clients choose us, and what is the the 3 foundations of success as an investing service provider, is really, it boils down to advice, access, and cost. So the advice we give is very strategic, is evidence-based and scientific rather than based on speculation. We want to approach this advice holistically. So all of your money, so you can see all of it together so that you can build wealth over the long term. One thing that is really a problem in Singapore is access to really good quality investment solutions and products. GIC does not have this problem of accessing products. So institutional grade, institutional quality, often exclusive access products, standing on the shoulder of giants, bringing in passive index funds into CPF when it was not available, bringing sophisticated fixed income and equity products, and more recently, private market solutions like Partners Group, and also KKR, with the only digital platform that works with many of these alternative and private market solutions. And cost, because in the end, the user experience and cost is what really drives this transition from an offline experience to an online experience. And as the lowest cost provider with no sales charges, no transaction fee, 100% trailer fee rebates, we do not keep a single cent of rebate or retrocession fees that financial fund managers pay us. And we are very efficient in terms of currency and tax because we're designed for Singapore-based investors. Across the spectrum of our solutions, we've recently launched our satellite and income portfolios. We have a full suite of solutions. So the breadth of services really focused on advised portfolios, but also you can build your own. So that debate about DIY versus advised. Some people have different needs. Some people want to manage their money in different ways. So our Fund Smart platform is a fund platform that where you can build custom portfolios using a curated list of best-in-class funds. But you can also buy a single fund. Endowers is now the lowest cost way to buy any mutual fund. Maybe more than 95% of funds on our platform are the lowest cost ways compared to a retail bank or a private bank. Even with a lot of assets, we would still be cheaper than a private bank in accessing buying a unit trust or mutual fund. We're definitely cheaper than most of the fund platforms like Fund Supermart, Doladex, or Poems or other brokers. So we are the lowest cost way to access single unit trust and mutual funds as well. So it's a broad selection where you can access advised portfolios off the rack that are designed and optimized by the endowers investment portfolio led by me. But also you have complete flexibility in building core satellite strategies, income portfolios, managing your short-term cash liquidity, and building your own portfolios as well. And as I mentioned, all of your wealth on one platform, CPF, SRS, and cash. So most people know us for CPF and sometimes for SRS, but the bulk of our assets is obviously in cash because that's where a lot of people keep their money. CPF, no one's going to have millions in their CPF until much later in life. So we manage all of your wealth, and cash is a very important component and the bulk of our assets and where our investors mostly gravitate towards. But also we have private wealth offerings for early high net worth investors. And I mentioned some of the unique alternative products like Partners Group, like KKR, KCOP, like Quantedge, and other products that are available on our platform for high-end private wealth, liquid all solutions from leading global fund managers as well. We also provide institutional clients and corporate benefits and corporate solutions as well. And finally, our latest advocate, a client of endowers and a very well-known person called Joan Pay is our model and advocate and our ambassador. It's a new campaign that's been going on, but for all SFA members, I did a panel earlier with the President Shadab and other members, and this is, I think, the same code, but it's still available to you if you wish to onboard with endowers. With that, I'll hand back to Ruben. Thank you.
Thank you, Sam. The last part is the most exciting part.
You mean Joan Pay, right?
No, I meant the fees. It's all about the money this session. Right. Thanks, Sam. To all my attendees, ladies and gentlemen, I know that we are coming, though it's already 6 o'clock, but do bear with us. I do encourage you to stay to the end with us if your time permits. And this time around, I got my alphabets correct. So next one, we will have stash away because it's T before Y. So to Michele, please.
Thank you. So give me just 1 second as I share my screen. Yep. And then also as a, I will also give a discount code at the end. So do stay on, to what Ruben mentioned earlier. So I think I introduced Stashaway earlier. So I'm now gonna tell you what we do. We are a digital wealth management platform headquartered in Singapore, founded in Singapore 5.5 years ago. Our vision, our mission, our mandate, what we wake up in the morning for is empowering people to build wealth. And so we manage money for hundreds of thousands of clients in 5 countries. As I mentioned earlier, we are in Singapore, Malaysia, Thailand, Hong Kong, and Dubai. We are backed by blue chip investors, including Sequoia, including Fidelity, which is one of the 3 largest asset managers in the world, and a few others, including some local family offices and angel investors from the early days that have kind of backed it from a kind of a very Singapore Inc. perspective. Now, last year, we won first place as a Singapore financial institution at the MES Global FinTech Awards 2022. So if you follow the FinTech Awards, you would have seen that there was kind of this competition on innovation for all financial institutions, and we're very lucky to be chosen as the winners, thanks to kind of the work we've done over the last 5 years. We are licensed. This is a point that was touched earlier when we were talking about security of investing with digital wealth management platform. We are licensed as a fund manager in 5 jurisdictions. In Singapore, obviously from the MES, in Hong Kong from the Securities and Future Commissions, in the UAE from the DFSA, in Malaysia from the SC, and in Thailand from the SEC. Without going into a lot of details, this protects all of our investors, because we obviously not only we want to do the right thing, but we're actually forced to do the right thing as well. And we need to be within the regulation that regulates all funds, all unit trusts, all mutual funds, and all structures that actually manage people's money under a regulatory environment. I stress what Sam mentioned earlier, the fact that there are out there some solutions that might not be regulated. This is something you might want to watch out for over time. Now, Stashaway is built to be simple, intelligent, cost-effective. The intelligent piece is around the way we help people invest. Simplicity is self-explanatory and cost-effective as well. Fees start from 0.2%. You know, there are some features that at this point I would argue are obvious. Maybe they were not 5 years ago. You know, have been able to access 24/7, having no lockup. You know, if you send us money before noon any day, it's going to be invested in the same day. If you want to withdraw, you click on a button, you get the money in 1 to 3 days, depending on the time you click that button on your app. You can do it, you know, lying in your bed in the evening if you want to on your app. So it's extremely convenient. We have a risk-first approach from an investment perspective. And what that means is that you will never see us speaking about returns without speaking about risk first. And in the app will help you understand how much risk you're taking. It was shared earlier, you know, if you want more risk, you need to take, so if you want more returns, you need to take a little bit more risk. And this is something that is extremely clear in our communication. And it's extremely clear in the way we manage the portfolios once you've invested with us. We make sure that given the risk you've given us, we will be within that risk and we will maximize returns given that risk level. That's the objective. Yeah? Control is incredibly important for us. The fact that you can always 24/7 see everything, and we give you a lot of information. While simplicity is the core of how we want the platform to be, at the same time, if you want to dig deeper, you'll find every information you want. You will know on a daily basis, I mean, anytime, 24/7, exactly how many units of a given ETF you might have in your portfolio. You can just click on your app and it's very simple to do. But if you don't want to know what an ETF is, you just want to kind of know that you are doing the right thing and investing in a diversified portfolio, you can also do that. So there is extreme details and extreme control, but it's kind of itself. You know, it can go on by itself. You don't need to touch things. You can change your risk profile any day. You can open a new portfolio or close a portfolio anytime. Always on the app, always by yourself, always in a few seconds with a few touches on either the mobile app or the desktop application, depending on what you actually prefer to use. Now, let me go quickly through our offering. So we have a cash management product called Stashaway Simple. Stashaway Simple is an extremely low risk cash management product. In fact, if you have invested in kind of money market funds and cash management product over the last 4 or 5 months, you would have noticed that the one with a bit of a higher duration would have probably lost money because of expectation on interest rate going higher. Stashaway Simple has continued to deliver the exact same promised return that we've been promising in the past. So it is designed to be a cash management solution. It's not an investment product. It's a cash management solution. Our core portfolios, as mentioned, we take a risk-first approach to it. There are 12 risk points, from low risk, equivalent to a basket of bonds, to high risk, equivalent to a basket of equities. We manage the asset allocation dynamically and strategically. So in the last 4.5 years, we changed asset allocation 5 times. If you look at the asset allocation today, it takes inspiration from the fact that we are in an inflationary growth environment. And so the asset allocation will include, on the fixed income side, things like inflation-linked bonds or floating rate bonds, which tend to do well with high inflation. On the equity side, you will have some exposure to raw material markets like Australia and Canada. You will have exposure to financial services, which is a subsector that tends to do better with inflation. And you obviously have exposure to energy, which again tends to do well with inflation. And I'll speak about that in a second. In general, it's a global exposure, extremely diversified and managed across economic cycles. We have now been around for 4.5 years. In a second, I'll share kind of our long-term track record. So if you invested $1 on day one, how many dollars would you have today? It's now, you know, robust enough given it's 4.5 years, and we went through several cycles. We just launched responsible investing. So with the same exact logic of the core portfolio, so the exact same asset allocation logic, the exact same attempt to diversify it as much as possible, but using ESG or responsible type of ETF fund. So across risk level, you can now make a statement on the way you want your money to be invested and where you want your money to go. We've also launched thematics. We have 4 themes you can choose from the future of consumer tech, where you're going to invest in fintech, in gaming, and things that kind of front B2C technology, let's say. We have B2B technology as a second theme. So this is blockchain, cloud computing, kind of the backbones of the future of technologies. The third theme is healthcare innovation, genomics, biotechnology, and things like this. And the fourth one is an environmental theme, so clean waters. Again, is a way to make a statement. If you, on one side, if you want to put your money at work in places you believe in, but secondly, this is obviously areas of very fast development where if there is a lot of investments going here, and they can provide returns over time if these are things you believe in. One peculiarity about our thematics approach is that they are also risk managed. You can actually decide how much risk you want to take. If you have a pure thematic portfolio, it's going to be quite risky. It's going to be all equities, and potentially it's going to be all technology equities, and therefore that creates significant volatility over time. And you will have noticed in the last 2-3 months, especially if you had like a technology portfolio with any platform, you probably the last 2 months, obviously technology stocks have suffered quite a lot. But you can, within StashAway, you can also decide that you want to have a thematic exposure to technology, for instance, but you want to balance it out with some bonds in order to reduce your volatility over time. That's easy to do with just a click of the button, with your thumb. You can do it on our app very, very, very quickly. And then lastly, we have an income portfolio, which is a low-risk, yield-focused portfolio with a strong Singapore focus, because obviously it generates yield in Singapore dollars, and therefore has also a currency exposure to Singapore. So these are kind of the 5 products that are currently live on the app from an investment perspective. Maybe I want to mention a couple of other things that are available on the app. One is StashAway Plan, which is a free to use software where you can actually plan your money and understand where, what you need to do in order to be financially free at a certain point in your life. Super easy to use. And it takes a few minutes to actually get real actionable suggestions on how to get there. And then secondly, StashAway Academy. Again, this is free to use. Just open the app, tab on the Academy tab, and there's going to be plenty of courses, both beginner, intermediate, and advanced, on financial planning and investing. We have curated them to be kind of a small size, 10 minutes videos with subtitles and charts. So very easy to follow, very quick. You can do it any point in time, on demand on the app. So StashAway Academy, again, free to use. Just download the app and click on Academy, and you will be able to do that. As mentioned earlier, we have now 4.5 years of track record. These are our 12 core portfolios. We take a risk first approach. What you see on the left is our StashAway risk index. The first one, 6.5%, is equivalent to a basket of bonds. The last one, 36%, is equivalent to the volatility of the MSCI equity world. And as you can see, annualized returns through the ups and downs of the markets. There was kind of the US dollar depreciation in late 2017 when we launched. There was a correction in late 2018. There was obviously a market crash in early 2020. And last year, there was an underperformance of China technology stocks because of the government the government overlay on regulation. Within that, long term, as we spoke about earlier, if you invest long term and you go through cycles, you will end up doing actually very significant long term returns that compound over time. That's why it's good to start early. It's why it's good to dollar cost average, and that's why it's good to not look at the market on a daily basis and stay invested throughout the ups and downs. The markets have obviously been a bit volatile and negative for the most part in the last 2 months, but still during these 2 months, we always encourage clients to stay invested in actually dollar cost average. We actually, in the last 2 months, year to date, we have actually overperformed very significantly benchmarks. In fact, even our higher risk portfolio has posted positive returns year to date. This is a very short period of time, but this shows how having an inflation-focused portfolio can actually help in an inflationary situation like the one where we are today. Now, as promised, I was promising a discount code. You can find it here. It's tinyurl.com/SFA2022. I'll just post it on the chat in a second, so you can actually click on it directly. This allows you to invest up to 30,000 Singapore dollars for free for 6 months. So no fees charged for the first $30,000 you will invest using this code. If you are already a client, reach out to our customer support and they'll apply this code, so you'll have the same discount even if you're not a new client. You'll find below all of our customer support contact points. There is WhatsApp, which you can actually access from the app as well as email, Telegram, and obviously phone. I will stop here, and I hope I was within my 7 minutes, Ruben, and I will hand it over to you.
Yes, you are. Thank you so much. Thank you, my friend. Now, Dhruv, thank you for being so kind. And now let me hand it over to Dhruv, please.
All right. Can you?
Yes, I can.
Are you good?
Yep.
Wonderful. All right. Thanks, Ruben. Let's get through this. So, as you know, we mentioned we are an MAS licensed platform in Singapore. We are offering a holistic suite of offerings. Of course, there is a SEIF Wealth, where a lot of focus of today's session has been. This is about fully managed, solutions, which can be customized to your needs. And then, of course, there is SEIF Trade, which is Singapore's first neo-broker. Now, just a quick, walk through our journey. So we launched in July of 2019, and from thereafter, we've had quite an incredible ride in the last 2.5 years. It's quite fascinating that our youngest customer is 18 and the oldest one is 93. So maybe it's never too late to start investing, Ruben. If you realize, what's even more interesting is this: though we have a web service, this individual is an app-only person. So very, very fascinating as to what we see. Now, what has really worked well for us is our existing users who've been on the platform, who have been impressed with not just the products that we're offering, but everything from the pricing to the transparency to the service. And nearly half of our users actually are now coming through referrals, which is very encouraging for what we are building. Now, we've done many, many firsts in Singapore. We launched the first of its kind REIT Plus portfolio, which we built in collaboration with SGX. It's done extremely well. If it was an ETF, it would easily be the biggest, REIT ETF in Singapore. We've also launched definitely Asia's and probably the world's first custom ETF-based builder. So essentially, you can build a portfolio even with $1,000 having 10 ETFs, right? And this was something which was just not possible. But again, this is the power of technology. This is what we've been building over the last few years, behind the scenes, and now actually giving it to all our users. We are one of the leading, personal finance apps, constantly rated in the top 10 on the App Store. We won the Digital Advisory Award last year by the DigFin Awards. We have been voted as one of the most popular platforms, for digital wealth management. And all this actually has led us to, in a very short period of time, get some incredible backing from world-class VCs. With the Series B, we've raised combined of almost about 52 million US dollars. Now, our backers are Valar Ventures, which is Peter Thiel, ex-PayPal's fame. They have backed some of the most iconic companies in the world, companies like Xero, TransferWise, N26. So they are a very fintech-focused firm. And it's been incredible because working with them is also making us bring the best kind of financial approach to solutions, which have been done globally now to this part of the world. And then last but not the least, we did last month launch the neo-broker. Now, talking a bit back on the wealth side, one of the things that we really focus is on research. Now, across the world, there are now maybe about tens of thousands of ETFs, right? On our side, we have an intensive screening process, which currently has over 8,000 ETFs. We then look for certain factors such as expense ratio, high liquidity, low tracking errors. Of course, we only work with the world's leading managers. As you can see, these names might be familiar: BlackRock, Vanguard, Invesco. And then, of course, the allocation that happens based on asset, on sectors, and on geography. So after this curation, we actually come down to 100+ ETFs that come onto our platforms. Now, some of them are available for customized solutions, which users can actually customize, but some of them actually go into our core offerings. I'll avoid going through all the details because I think the website does a very good job at it. But in reality, they are pre-made solutions which are catering to needs around global exposure, whether it's income, whether it's ESG, and so on. At the same time, if you want a customization, that's something you can do on the platform as well. Now, not only have we made the accessibility of this curated list available to everyone, we also focus heavily on cost. Now, one of the premises, and this of course comes a lot from my own background, is that ETFs by design are generally more cost effective than funds. And what we've really seen is that if I just look at the fees of the underlying funds, what our core portfolios use, that fees is probably sometimes even 1/10 of what the banks, I think someone else also adhere to it, what a bank would probably charge you would be sometimes 2.5% annually just for maintaining. Now, this might not seem very big, but I think this graph can give you a perspective that over a span of even, let's say, 12 years, 13 years, that difference can be significant for exactly the same investment. So keeping your cost low and keeping it effective is one of the very, very premises of SEIF, because at the end of the day, saving that extra 0.5% or 1% is a guaranteed increase in your return effectively. And given that we are wanting people to invest for 10, 20, 30, 40 years, this sum actually can play a very, very significant impact on how your portfolio eventually forms at the end of it. Now, safety is our number one priority. I think we mentioned about it earlier. All our clients' assets are completely segregated. We work with the world's leading custodians, such as DBS, such as Citibank, such as HSBC. The cash is normally kept either at HSBC or DBS, and all invested assets are typically within Citi and HSBC. So this actually ensures that even, God forbid, if something happens to us, the customer assets at all points in time are safe. And this is something which obviously has been imposed by MAS, just like on myself, same with the fellow panelists. So again, as customers, you can rest at peace that your assets, your money is safe, and it's always working for you. So essentially, in a nutshell, I would say we basically have three main offerings. One of them, which is the SEIF. This is what we've been talking a lot about today. This is the managed portfolios. This includes everything from cash management to the REIT product, which is very popular for dividends. As you know, it gives about 4 to 5% dividend, very effective. Along with that, of course, we have customized solutions and thematics around like my fellow panelists, ESG, clean tech is something which has been extremely, extremely popular for us. And that is something that we offer through ETFs on our platform. SEIF Trade, of course, the first new broker, fractional trading, free trades, auto FX, as well as real-time market data in partnership with Dow Jones. And lastly, for anyone representing organizations out here, we do have SEIF for Work, which is about holistic financial wellness and education for your employees. It also is eligible for a lot of financial institutions who use our services, because typically they sometimes have constraints around what platforms that you can sign up with. So it's a great tool for them to sign up with us, because then it allows their customers, their employees to benefit from our offering. And lastly, of course, if you're a corporate, the pricing and structure, etc., can be customized to your need. Great. And with that, I'll come to probably something that is, I want to believe, one of the more exciting parts of my rather small presentation. We have built a special promo for SFA. The link is downstairs, as well as the QR code. There's a promotion on Wealth where you can get your fees waived for 6 months up to $50,000. And for Trade, there's a $70 credit for you to sign on. So yeah, do sign up, and we'll be happy to take any Q&A as we get along to it.
Thank you, Dhruv. And I'd like to thank all my speakers. You guys excite me at all your last slide. So I really hope our audience take good advantage of this rare offering that you get 3 promo codes from 3 top digital wealth management providers all at one time. All right, ladies and gentlemen. Now, I'm mindful of time. I'd like to thank everyone for staying through all the way to the end. What I suggest right now is probably we'll just take on a couple of more Q&A because I think there are a couple of very good questions. Let's just take them before we wrap it up, okay? I do have one question that maybe I just want to invite everyone to just take a quick step at it. And it goes like this. All 3 platforms are digital first, but how do you meet their needs and onboard certain segments of investors who may not be so familiar with such medium? But to maybe interestingly, let me bring that to Dhruv then, because Dhruv, you mentioned that you have clients as old as 93 years old. So how do you onboard someone who may not be familiar with such medium? Sorry, Dhruv, you're muted. Yeah.
Apologies. I think you'll be surprised how people are really adopting to this thing. It's become really common now, right? So our onboarding is still digital always. However, what we've built is an incredible customer support team, a very detailed FAQ, complete transparency in the process, as well as access to MAS licensed wealth experts. So you can actually speak to one of these experts and understand how our offerings might be suitable for you. Now, bear in mind that all of these experts are only salaried. They have no commissions, they have no targets, none of that sort, right? So we are trying to really remove that kind of biases which has plagued the system for far too long. So when they speak to our wealth experts, they actually get a very unbiased advice. And sometimes the advice is maybe SEIF is not right for you. As I think someone else mentioned earlier, if you want 20% return, but you want to take 2% risk, it's never really going to work out, so as to speak, right? So we basically are happy to help them and guide them through the journey. But eventually the onboarding has to be digital. That is the premise of digital. That's how you can monitor your portfolio and act. What has been surprising, and I think our 93-year-old client is testimony to it, that people are changing and changing faster. I see it with my parents too. I would never think my mom would be wanting to Zoom with me on the weekend, but here we are, right? So yes, it's changing, but we have the human touch if required for customers as well.
Thanks, Dhruv. And maybe are there anyone speakers who like to take a step at this question as well? That do you have any other suggestions on how you can onboard people who are not familiar with such medium?
I think what Dhruv mentioned is quite comprehensive. I think the way we also deal with it is make it extremely simple on one side, and you'll be surprised, how everyone got very comfortable with digital medium, especially over the last 2 years, and two, with a very strong ability to get in touch with customer support. So in our case, we pick up the phone in less than 8 seconds. We have kind of WhatsApp available on the app, so we just make it very simple to have somebody help you if you need any help. But to be honest, it happens quite rarely. People tend to find the onboarding process very, very easy.
Right. And Sam, I assume you will be agreeing to that too.
Of course, yeah. I think we're very similar experiences in design, the way we onboard, and just like Dhruv said, we have people really young to really old. And I think one thing that has really helped all of the platforms is, during COVID, there has been a huge surge in digital adoption. And using financial apps has become much more common, even for the elderly, because we can't physically go to bank branches and stuff. And so I think that's really helped all of us. And I think we underestimate the digital savviness of our customers. We've been very surprised by the experience so far. And all of us, I think, especially endowers, the user experience is really exceptional, especially when you compare it to the incumbent financial institutions and the kind of services we're used to. It's, I think, mind-blowing almost in the way we've improved the user experience.
Thank you, Sam. Now, ladies and gentlemen, thank you for staying all the way to this time with us. I'll just like to quickly just summarize what has been going on for the past 80 minutes. Cash is trash, ladies and gentlemen. And as pointed out earlier, we have more than 30% of savings in your bank account. And really, with inflation rising, with getting, and if your fixed D is really probably just drawing anything definitely below 1%, maybe probably 30 bits. Ladies and gentlemen, do consider other alternatives. And like all my esteemed speakers has mentioned today, they are safe, it's liquid, stay in the market, not game it, but time it, but stay in the market. And more importantly, whether you have low risk appetite or high risk appetite, there is something all available for you. More importantly, if I want to summarize in one key thing, when we talk about diversification, digital wealth management is not one of the diversification. It is the diversification. So you can actually diversify all your investment portfolio on one platform. More importantly, we don't only just have 3 good options here in Singapore, we have quite a number of them. And most important that I really want to call out is that you don't just, and it's not exclusive. It's not exclusive. You can, all 3 companies that we have here today have very good offering. You can very well put your money in all 3 and diversify even further if I were to stretch the word diversification today. All right, ladies and gentlemen. So if this was physical, I would really invite everyone to just stand up and give them a standing ovation. Right? So really very interesting insights today. But nevertheless, one last time, allow me to thank on behalf of the audience. Thank you, speakers. Thank you so much that we have benefited so much from all your sharing today. And with this, let me call this to the end of today's webinar. Thank you.
Thank you, Ruben, and thanks everyone for joining.
Thanks, guys.
Thank you, Ruben. Thanks all. Nice to see everyone.
Bye, Sam. Bye, Dhruv.
Bye, guys.
See ya. Thank you.
Bye-bye. Bye-bye.